Welcome back, everyone. Today, we're diving into a fascinating earnings explainer. We're unpacking Quest Diagnostics and their stellar second quarter in 2026. We're going to look at the hard data, straight from the source, to see exactly how a healthcare giant successfully scales up testing volumes and drives some serious revenue growth. It's a great one, so let's get into it.
We've got a lot of dense financial data to cover today, so here's our agenda. We'll kick things off with Section 1, the headline, Record Q2 Growth, followed by 2, diving into the financials, 3, innovations driving the numbers, 4, operational excellence in action, and finally 5, looking ahead, upgraded guidance. Let's jump right in.
All right, Section 1, the headline, Record Q2 Growth, starting with the biggest news of the quarter. Now take a look at this statement from Jim Davis, Quest's chairman, CEO, and president. He says, with strong growth and sustained demand for our diagnostic insights, we are again raising our full-year guidance. This quote is honestly the perfect anchor for our analysis today. It shows right off the bat that Quest isn't just having a good quarter. They're so confident in their current momentum that they're raising their own expectations for the rest of the year.
And to understand that confidence, just look at the sheer scale here. Quest hit a massive $3.04 billion in total net revenues for the second quarter. I mean, let that sink in for a second. We're talking about a 10.2% increase from the exact same period last year. In the world of massive, established healthcare diagnostics, pulling off double-digit top-line growth, that is a phenomenal achievement.
But wait, it gets better. Right on the heels of that revenue beat, their adjusted diluted EPS, which, is basically their profit per share after stripping out all the one-time costs, that jumped an incredible 19.1% to $3.12 per share. So what does this actually tell us? It tells us that Quest isn't just bringing in significantly more cash, they're doing it highly, highly profitably.
So how they pull it off? Let's move to Section 2, diving into the financials, exploring the data behind the revenue surge.
Looking at the financial trends here, it becomes super clear that this wasn't just some lucky one-off quarter. The upward momentum we're seeing is the result of highly focused, sustained operational execution across all their major channels. We're talking physicians, hospitals, and everyday consumers. They're basically firing on all cylinders.
This table really lays out that year-over-year leap. We just talked about the revenue jumping to $3.4 billion and the EPS climbing to $3.12. But look right there in the middle. The standout metric is their requisition volume, which saw a massive 13.1% increase. That is a huge jump in the actual number of tests being ordered.
And to dig into that a bit more, check out this 13% spike in organic requisition volume. This is a crucial indicator. It proves this growth isn't just them buying up other companies to look bigger on paper. No, there is immense native baseline demand for their core testing services. More people and more providers are actively choosing Quest.
Which brings us to Section 3, innovations driving the numbers, connecting medical advancements to the bottom line.
You really have to ask yourself, with volume numbers surging this aggressively, up 13% organically, what exactly is driving this? I mean, what specific new tests and technologies are consumers and doctors suddenly demanding so much of right now? What's the catalyst?
Well, the answer lies in some pretty major clinical breakthroughs. Quest isn't just running your basic run-of-the-mill blood panels anymore. They recently secured rigorous New York State approval for their Haystack MRD solid tumor cancer test. That's a huge deal. They've also become the largest reference lab to integrate Flatiron Health's OncoEMR platform. Plus, they're seeing double-digit growth in their revolutionary Quest 80 Detect blood tests for Alzheimer's disease. Add in some major advancements in cardiometabolic and endocrine tests, like for liver fibrosis, and it paints a clear picture. Better, more advanced healthcare directly fuels those higher revenue lines.
But having great tests isn't enough if you can't deliver them efficiently. Let's look at Section 4, Operational Excellence in Action. Partnerships and tools improving the clinical experience.
Think about it. To handle a 13% spike in testing volume without sacrificing an ounce of quality, you have to scale your infrastructure, right? Quest is rapidly expanding its operational footprint, building strategic partnerships, and upgrading its internal tech to make absolutely sure they can meet this surging demand seamlessly.
So, how exactly are they pulling that off? Well, they've advanced their Collab Solutions joint venture with Corewell Health over in Michigan. They've partnered up with Fresenius Medical Care to develop advanced capabilities specifically around kidney care. Outside the lab, they just launched a brand new tool called IntelliDrop. This actively guides clinical staff through smoother specimen collection, which is a real game changer for the patient experience. And inside the lab, they're heavily extending automation for things like cervical cancer screening and front-end specimen processing to seriously boost productivity.
Okay, let's wrap things up with Section 5, looking ahead. Upgraded guidance, what this means for the rest of 2026.
Because of this blowout Q2 performance, Quest has significantly upgraded their full-year guidance. Look at this table. They've raised their net revenue ceiling to over $12 billion, specifically $11.95 to $12.05 billion. Their adjusted diluted EPS is now expected to hit between $11.05 and $11.25, and they're bumping up their expected cash provided by operations to roughly $1.8 billion. Literally, this is a company telling the market, hey, we fully expect this momentum to keep rolling.
And the underlying data shows this growth is remarkably sustainable. They anticipate their operating margins to actually expand versus the prior year. Meanwhile, their capital expenditures are holding steady at about $550 million, and their adjusted tax rate remains totally consistent with 2025. But you know what I find really fascinating? They're seeing incredibly robust consumer revenue streams coming directly from QuestHealth.com, as well as through partnerships with consumer wearables.
So I'll leave you with this final provocative thought for today's explainer. As Quest continues to merge highly complex, cutting-edge clinical tests, like Alzheimer's and cancer blood screenings, with everyday consumer tech and wearables, are we witnessing the absolute transformation of how we approach our own preventative health? The data we've unpacked today strongly suggests we are. Thanks so much for tuning in, and keep asking the big questions.